Building on this conversation with Ziwang, we're now joined by Centrifuge founder and CEO, Lucas Vogelsang. Welcome, Lucas.
Hey, thank you.
You're in your hotel. You're safe.
Yeah, probably probably the last conference for a while. Yes.
Okay. What city are you in now?
I'm in Frankfurt, and funnily enough, they did the crypto assets conference, which is actually pretty well regarded, more on the enterprise regulatory side, conference that they did the first iteration this year in March, right before things started getting bad. And I guess now actually
Germany's getting shut down again.
Germany's getting shut down again, so they did get it in again right before. So yeah, it was a funny coincidence, or not so funny coincidence.
Actually, yeah. Well, I'm happy to hear that you're in a good place. Well, look, I've been following Centrifuge for a while. I think you're obviously working on some very related areas here, but maybe you could just tell us a little bit about yourself and your journey into this, just to set the stage.
Yeah. So maybe I think there's two sort of things I always like to talk about when specifically do my journey into Centrifuge. Maybe a bit of my past life and my co-founder's past life is that actually we built a fairly large traditional fintech in San Francisco, a company called Thalia that pioneered a specific piece of I would say I call it trade finance, or sort of there's a B2B lending space. Mm-hmm. Specifically, Thalia pioneered this idea that financing opportunities to your entire supply chain by working together with a bank, getting a line of credit from them, and then offering that, giving an alternative to these companies to going to what traditionally are very complicated and expensive factoring businesses. Mm-hmm. And so Thalia, to date, I think they're averaging financing around 30 billion a year, originating 30 billion in loans, and are doing that for 150 of the global 2,000 companies. And so maybe just super quickly, for example, Toyota is one of their customers. Toyota offers some of their smallest and some of their largest suppliers a chance to get an early payment at the click of a button, and that using either Toyota's own cash or third-party cash to do this. And so this is where we came from. So we got to know the B2B banking and finance world really well, and we saw what it looked like both for the largest and the smallest businesses in the world. And based on that, actually, so then 2007, end of 2017, beginning 2018, we started sitting back together at a table, figuring out, okay, what would the next iteration of Thalia be? What would the next fintech be? If we were to talk about blockchain and crypto, think, okay, how could this technology be adopted? And at the time, I think DeFi became a maybe somewhat common word in half a year later, or even later. But really, it was Maker was a thing, Dharma protocol was sort of just coming up, I think.
It was about half a dozen projects that were
exactly.
DeFi. Yeah. There was the concept.
But when was Circle actually founded?
We were actually founded in 2013.
Okay, good. So you guys were actually, I don't remember when I first heard about you, but yeah, I mean, it was a small space. We were thinking of, okay, how do we find a way that actually real businesses, the ones that we knew, that ones that we worked with, that had huge need for capital, could actually access the liquidity that existed in blockchain. And what Paul Brody said earlier on, businesses don't want to pay for invoices in Bitcoin, obviously very true. So we started thinking about working with using stablecoins to finance loans. Yep. And so sort of fast forward to where we are today, actually, then we quite soon realized that a sort of large missing piece in this chain from invoice or house or sort of asset to financing is actually that DeFi today is not made to scale to the single non-fungible asset level. Mm-hmm. And so these assets they have an independent due date that you can't really cut them up. You can bundle them, but
it's a specific thing. It's like an invoice from a company. There's one of those. Yeah.
So we were actually some of the first people to think of, NFTs are the thing to use for representing real world assets. But then Exactly, invoice NFT, which is sort of, we pushed that out as a sort of first experiment in 2018. But the problem was actually DeFi, while everyone loves to use NFTs and think of how to do them, the governance and sort of the scalability is not there to do that for individual invoices. And so we started building a securitization layer on top of that. So having a way that you can bundle these invoices, pool them, and have investors invest in these pools, getting a blended return, getting sort of a diversified portfolio. And now this much more liquid, larger asset class is actually what you can interface with an Aave, for example, or a MakerDAO. And
Yeah.
so that's what the product is that we're building now with Tinlake. It's like allowing real world assets, trade finance with a large focus, but also others to be financed using DeFi liquidity settled in stablecoins.
It's extremely cool. So this sort of intersection of, quote unquote, real world assets using DeFi mechanisms like liquidity pools, even AMMs on liquidity pools of these NFT based real world assets, stablecoin settlement, right? It sort of creates decentralized markets for, essentially decentralized money markets for these externalized forms of assets.
Yeah. Yeah. So
That's awesome. It's very, very interesting. How are people using it? Like, what are some of the first use cases that you're seeing?
Yeah, so we've been live with sort of the first version of Tinlake since May. We actually just last week launched the second major iteration. Technically, it's version 3 because we did some of the very earliest transactions with our really first version together with the Maker Foundation back in summer last year. And so the first iteration we launched, the second iteration we launched on mainnet public product release in May. And sort of the usage has been still very small. It's like super early, but I can just name a few. For example, Console Freight is a freight forwarder technology company. They manage, they're building tools to allow freight forwarders and buyers to coordinate delivery of goods, sort of settle these shipping transactions. So they have invoices, they have data, they have customer relationships, and these businesses, like almost every other business in the world, do have a need for capital. And a lot of times, like, working capital is a thing that they would like to use as a source to get liquidity when they need it. And so Console Freight's in the ideal position to offer that service. And instead of building out this finance product using a bank line of credit or some credit hedge fund as a source of capital, they were visionary enough and sort of believed in crypto and DeFi enough that they said, actually, if I can tap into the liquidity in DeFi, in the long run, I'll be able to have a source of capital that isn't just one source of capital where I depend on one bank and I'm subject to whatever the system is they have, whatever the underwriting criteria, the slowness of the process, but actually I can offer my credit, my debt, or my debt, actually not my credit, my debt to whoever is interested. And so that could be a MakerDAO, that could be money markets, that could be you and me that just want to have exposure to this asset class. And so that's the vision for these users, is to get this like super flexible, dynamic line of credit, essentially like use DeFi as their line of credit to start originating these loans. And so Console Freight is an example. They finance over 100 loans. I think they did around 700,000 DAI in originations. So they're using DAI to settle these loans. And they've sort of done this, I think, in 3 pools so far. And they've now just last week we're also one of our early, actually the first ones on the new release that we just released, and sort of started a revolving pool that has now grown to 300 DAI in size. So they have around $300,000 in money that they're originating, growing that over time. And so that's that's what's maybe a quick summary of what's been happening in the last month.
That's awesome. That's I mean, connecting the dots to like really making this happen for people is really exciting. I mean, obviously, like we can see where this is sort of headed at a high level, but as this grows, like, who stands to benefit the most from this, and who stands to lose the most from this, assuming this gets to scale in the coming years?
So what I always think of crypto is like the thing that people always see is that it can disintermediate a whole bunch of things, right? And I think in trade finance and in just a lot of debt, that is actually where we can get to a point where the person providing the liquidity and the person requiring the liquidity now move that much closer, right? And that in the end will result in like hopefully more interest for more yield for the investor, but also a lower rate for the borrower. And I think like sort of that is what the like transparency and the openness of the Ethereum ecosystem, and then by extension the DeFi ecosystem that came through it, I think it sort of has it ingrained in this idea, right? Like if there is like this is transparent, and if there is an opportunity that could be arbitrage or that could be removed, then you can do that. And I think that is ultimately what stands these businesses, both investors, to benefit the most. The ones that I think will be ultimately left behind are the large institutions today that are not willing to really optimize their process, right? The companies that today are happy to pay half or charge 0.5% for a bond that Google issues, but at the same time say a small business needs to pay 15% APR on their trade finance assets. The credit risk is not 30 times more. So the reason this discrepancy is here as well, because did scale inefficiency of process, right?
This concept, I use this a lot. Like, the internet is incredible at building these multi-sided marketplaces, multi-sided platforms that allow like a very, very long tail of participants to get involved very, very efficiently. Whether that's like, I'm a tennis instructor and I'm going to bid on ads and I'm going to find the right person through AdWords, like this auction marketplace, or obviously the original example of eBay, but like marketplace platforms let the long tail participants have the same level of reach, the same level of access as the biggest, right? And we haven't had like platform marketplaces on the internet in financial markets. And what blockchain does, and DeFi and decentralized markets, right, is it creates that level playing field, right? And it makes it efficient even at that small business scale to participate in debt markets, whatever they might be, in a way that, in a human intermediated world where you've got, loan officers looking at, books and records and so on, is just it's just not feasible economically.
Yeah, exactly. I mean, I think that's really what's happening. I mean, I think the reason why is, right, that, I mean, maybe you could say peer-to-peer lending and then crowdfunding were some of the technological or like more like product inventions that started breaking down these barriers of like large institutional banks. But really still there's like so much red tape around that it hasn't done it hasn't been the 10x improvement, where I agree with you. Crypto DeFi is the place where we now see that actually this could enable this marketplace for financial assets.
We hope and pray. Now, in all seriousness, it's sort of happening with an incredible pace. There are barriers, obviously. Like there's all. I mean, we're both entrepreneurs. We're trying to build this, and we're running up against the inertia of the existing institutional frameworks, the existing regulatory frameworks, all this kind of stuff. What do you see as like when you think about the biggest barriers that are in the way for what you're doing? What do you see?
I think so. I mean, I need to make sure that I don't start just complaining about fiat on and off ramp costs.
We can
sort of usability
out there.
I know, and I mean, I think sort of when you do start interfacing with the real world, you have regulatory issues, and I mean, if people would know like the legal bills involved in trying to innovate in both within the legal framework and the technical side, then like, I mean, yeah, it's a sad story. But the other thing that I do think is extremely important as well, like as long as we're sort of operating at this bridge between, or at this intersection between real world and crypto, a key thing is just making this on and off ramp really easy and fast. It's not just the cost, but also the speed, right? And so like when we started doing these first like real businesses that never owned any stable coins before, like never really had a significant amount of crypto. The I was looking at, okay, like how do we solve this problem for our users where like they pay upwards of like 0.5% for buying their crypto, and sort of then how do they keep them safe, and all that, right? And so I mean, for a small business,
Yeah.
I dream of a time where actually I can have a bank account, and whether my money is in crypto or whether I write a check somewhere or send a wire, it doesn't matter, right? And I can do both from the same balance, because as soon as I have to think of my money being in crypto or out of crypto, it's a hassle. It's like, actually, like I have this problem that now suddenly I have a liquidity crunch on one side or the other, and that's
I think we're moving inevitably to a digital currency first treasury operation kind of world, right? Where, it'll probably start with SMEs. It's not going to start with, Ford Motor Company or BMW, right? It's going to start with SMEs who go, I want to keep my working capital in stable coins. I'm going to participate in yield. I'm going to have like the fastest first party payments that I've ever had. And yeah, I can interface with wires and other things, and I can do that on demand. I can do that at the same cost and efficiency as people who are entirely in that, but I'm inheriting all these benefits that are there. And we're excited about that. And then once you're there and people can interface with DeFi markets and other protocols and whatnot, I think businesses will say this is just so much superior. It's sort of like people moving from the running their own data centers to using cloud services. I mean, like, it's insane when you think about like the number of businesses that had like all these, racks and racks of stuff that they're doing, right? And so everyone's pretty much cloud first if you're, in most businesses now, right? So it seems like we're inevitably headed there. But it is a barrier. It is definitely a barrier, and that's one we're working very, very hard to knock down. I guess like looking out a little bit, what does mainstream adoption look like in this, in broader global commerce in the next like 2 to 3 years from your perspective?
So I think, and this is maybe also like a learning of the three-ish years or more now that I've been in crypto, is that just sort of thinking of the user, we went with what you would probably call a multiplier, right? Sort of the way we started building these pools, how we allowed users to actually access liquidity, is unfortunately not going directly to the business today, because sadly for them to start dealing in crypto, it's still a bit out, and it means like there's a whole lot of knowledge. Like keeping your keys safe is really not that easy, even for me.
Right.
And as a software engineer doing this thing every day, I'm nervous every time I do something bigger, right? And so the sort of the early adopters that I think are interested in this stuff and see it and understand it and have the long-term focus are fintechs. And that's why I think sort of I call Console Freight a fintech. And I think those are the businesses that can take actually this opportunity, think already about money as a technology that they use, or sort of interface that directly with technology. And so those I think are going to be the ones that start adopting this stuff first. And so for us, they're the multipliers that actually do make sure that the loans originated in DeFi end up as US dollars on the business's bank account that needs it.
Yeah, totally agree. Fintechs are going to be the front edge of market adoption. Well, awesome, Lucas. Really great to have you on, and very excited about the progress you guys are making, and look forward to.
Yeah, and then let's talk about that crypto or on-chain treasury first bank account idea. I really am curious to see what. I think you guys have some interesting stuff in store as well there, right?
We've got things in the oven.
Good. Cool to see.
Yeah, awesome.